Is now the time for buyers to jump into the market? There's a shifting market, and we're going from a seller's market to now a balanced market and maybe even a buyer's market. So is now the time to jump in? Well, in this video, I'm going to cover off a Storey's article which talks about what buyers should be looking at when it comes to buying real estate right now in a shifting market. And make sure you stay until the end, because I'm going to also share with you what's happening out there in the real estate world from what I'm seeing. So let's get to it. Hi everybody, my name is Connie Sarvanandan and I'm a real estate agent and investor here in Toronto in the GTA, and I think we should just get straight to the article. Okay, so this is the Storey's article, and as always, I will link it below so you can read it yourself or get more details from it if that's what you'd like. But the Storey's article is titled, "What Balancing Housing Markets in Ontario Mean for Home Buyers." And basically what they start off with is that, with interest rates rising and as a result, demand softening, it's leading to decreased pricing. And so it's a real opportunity for buyers, but what buyers should do is just look at the whole picture before they make a move to make sure that they understand all the moving parts. The other thing that they're saying is that even though prices rose at unexpected rates over the last 2 years during the COVID pandemic, there's still inventory shortage, and so there are opportunities, but it's not necessarily across the board. And then so there are 4 things that they are saying that any buyer should consider, and they get into detail on each of those 4 things. So the first thing that they are talking about is timing. So, I've said this a million times, you cannot time the market. And, there are so many unpredictable things that happen. COVID-19 is a perfect example of that. The housing market went nuts over the last 2 years on something that nobody could have predicted. And the reason why it went nuts over the last 2 years is because it affected so many things. For example, it affected supply chain. It affected commute time. It affected work from home. So you needed larger spaces because all of a sudden people were working from home and kids were studying from home. So all of those things led to prices increases in housing that we had never, at rates that we had never seen before. But it was all caused by something that we could not have predicted. Now there's different factors that, rising interest rates, that's definitely an indicator. There's other things that help determine, where we think the trends are. But timing the market is almost impossible because there's so many unpredictable things that can happen that can make the market go up and down. And so next, they're just talking about the fact that with the Bank of Canada's interest rate hikes, we're seeing some quick shifts in the marketplace. And if you have some flexibility with your finances, then this could be a great opportunity for you, because flexibility with your finances means you're not just tied into the interest rate going up or down, because as interest rates rise, what you're pre-approved for a mortgage will go down. And so if you have more flexibility, maybe you have a bigger down payment or you're a cash buyer or things like that, then you may have an advantage right now and something to take advantage of. So that's what they're talking about with timing. So what does that mean about financing and flexibility? Let's talk about that. Okay, so they're saying consider your finances. So the thing about the finance piece is it's not just your mortgage. So if you're getting a mortgage, then yes, for sure, the interest rate hikes are going to affect your mortgage. But it's also going to affect all kinds of other things like any other consumer loan you have. So if you have a line of credit that you're paying interest on, that's going to be affected. If you're buying a new car and you're financing it, that's going to be affected. So interest rates hikes are not just about your mortgage payment. It could affect other payments that you have as well. The other thing to consider is inflation. So inflation just hit 6.8%. And that affects everything from groceries to gasoline. So when you're considering your overall financial picture, you have to take that into consideration as well. So for example, if you are commuting into Toronto from somewhere, or you're commuting for your job in general, and you have to pay for these inflated gas prices, that is going to change your financial picture, and it's quite different from somebody who may just walk to work. So the change in gas prices does not affect them at all when it comes to their financial affordability. So it's looking at your overall picture. And then, of course, it's considering the interest rate hikes that have been happening. You know, the Bank of Canada has been very clear that they are continuing to raise interest rate hikes. And if you look at what's happening in the US, they raised their rates by 75 basis points. So we've been doing, we started with 0.25, then we went to 0.5, and now this could be 0.75, which would be a very big hike. So, of course, that's affecting it overall as well. The next thing you want to consider when it comes to financing is that, we do have a stress test in place in Canada. So what does the stress test mean? Well, right now, when you are qualified, they're looking at, borrowers at either 5.25% or 2% above the contract rate, whichever is higher. The stress test is basically put in place to protect consumers and to protect the overall housing industry from interest rate hikes creating a huge crash. And this was really created as a result of some of the things that happened before. So, for example, during COVID, we had some of the lowest borrowing costs that we've ever seen. So what happens now is when you go to get a mortgage rate approval, they're actually going to put in a stress test of higher rates to see if the rates go up, that you can still afford your payments and you can still manage everything as a whole. So that kind of has protected these interest rate hikes. And so that's actually a good thing. But it also means, because of the stress test, what you think you can afford may not necessarily get approved, because they are adding this additional interest rates hikes as part of the overall financial picture for you. If you're finding value in this content, please like and subscribe. It really helps us out. And if you have any comments, good or bad, please put them in the link below. It really helps us determine what kind of content interests you. And if you have any real estate needs, feel free to call, text, email, or WhatsApp, and we'll be sure to take care of you. And if you want to talk to me directly, I'm going to put my calendar link down below. I love talking real estate, and I'm happy to help out. Okay, and then the last thing that they talk about is really whether you should get a fixed or variable rate mortgage. And the advice is whatever you're comfortable with, and I agree with that. A fixed rate mortgage will give you the comfort of knowing exactly what your payments are for the entire length of the term and exactly what your interest rate is for that period. Variable, on the other hand, can save you money, but you need to monitor it, and you need to be comfortable with these rapid shifts that are happening. So it's really about comfort level and what is more important for you, knowing exactly what you're going to be paying and paying the higher rate, or going variable and getting a lower rate, but dealing with the uncertainty. So those are the financing questions. Next up is considering your location. So location is pretty straightforward. It's really about your lifestyle and your current situation and what makes the most sense for you. What happened over COVID was that people, especially within the much more dense, smaller home cores, were moving out to much more bigger homes in more suburban areas, because there was work from home and there was a lot more flexibility in, commuting and things like that. So it's really looking at your personal situation to see what makes more sense. Typically in a normal market, what happens is, if you're in Toronto, for example, homes are expensive, and as you go further out of Toronto, the homes get less and less expensive, which in general is still true, but what happened over the pandemic is you had areas outside of the GTA that grew at exponential rates that were, much higher rates than even within Toronto. So that was really the anomaly that we saw during COVID. And the markets that rose the highest that were outside of the GTA are probably the ones that are going to get hit hardest as far as prices coming down. And I did a video on this before, so if you want to see that, we'll link it below. But location is really about looking at the overall picture. So if you have flexibility with coming into the office and you don't need to go, you may not necessarily have to move back into Toronto. However, if there's other considerations like you have to commute every day and things like that, that will affect your decision as well. But generally, first of all, the further out you go, the prices get cheaper, but also the space gets bigger for what you are paying your per square footage. So that's all they're saying in this part. Next is finally consider the value of breaking into the market. So what exactly does that mean? So what that means is really looking at, what home ownership means. If you're renting, then, your rent is your rent, and that's just, when you pay it, it's gone and everything else. When you buy, you are paying interest, but which is part of your mortgage payment, but then you're also paying your principal, which is paying it down. So you are getting equity and you are building equity. So when you look at the overall market, you want to make sure that you understand that getting into the market, that is what you are looking at, is that you are starting to build equity. The other thing it mentions is, of course, when prices are high and you have to sell, then you're selling high, but you're also buying high. As prices drop, you're going to be selling lower, but you're also buying lower. So that's also something to consider. But overall, that's what the article is saying. For me personally, what I would say is, yes, all those things are important when it comes to buying. And I think, in this marketplace, there's definitely opportunities out there. What I am seeing as an agent is, the showings have slowed down, the offers have slowed down, but they haven't stopped. So, I'm still seeing activity, but the days on market are much longer. So things aren't sitting on the market 2-3 days and getting bully offers and then they're off. You're seeing 2 weeks on the market and then you're seeing activity, because what buyers are doing is buyers are waiting to see, because nobody wants to overpay for anything. And so they're waiting to see what the activity is on a home. And then if they like something, they're doing their comps and making sure that they're not overpaying, and then they're still making offers. So I was a little bit wary a couple of weeks ago because I was seeing such a slowdown of showings and offers and everything else. But I think what's really happening is we're shifting into what should be a balanced market. Maybe we're going to shift into a buyer's market, but we are definitely out of the seller's market that we were seeing, especially when you look at a time period like February. And that was just craziness. It wasn't healthy for anybody, because everything was rushed, everything was going up exponentially. It meant that a lot of people were not going to be able to afford housing anymore. And so this is now coming to a more balanced market where you are seeing things like conditions, you are seeing things like no multiple offers, and there's time for buyers and sellers to contemplate what they are doing and what offers they are accepting or what offers they are giving. So that's it. If you have any questions about this article or what's happening in the marketplace, feel free to reach out. Call, text, email, or WhatsApp, and we'll be sure to take care of you. We have clients from around the world, and we love talking real estate. And if you want to talk to me directly, my calendar link is down below. Thanks for watching, and I will see you next time.